Hello, everyone, and thank you for joining us once again on this lovely evening, Thursday evening. My name is Immaculate Businje. It is always a pleasure to have you all join us for our special session for financial literacy and money matters. Tonight, our discussion or our topic is one that we always love to hear about: protecting your wealth. The best practices we all need to know. As we all know, wealth creation, it is everybody's actual wish and need. But do we actually even think about protecting what we build? We always actually say financial security isn't just about building the wealth. It is about protecting what you've worked for and securing your loved ones again for the future. Should we just make the money, the wealth, create everything that we need, but at the end of it, forget to protect it? So tonight, we are fortunate to be joined by Dr. Sharon Uwanyuze, who will share simple but practical steps of how we can all safeguard our assets. So to start this discussion, these sessions are always interactive. We ask you to always open up to discuss, because we love to learn together. Jot down your questions, your comments. At the end of the session or the presentation, we'll give you a chance to ask and add, because this again is supposed to be an interactive session for us to learn together about what matters to us, wealth creation, and for today, and how we can protect that wealth. So to start our conversation, I have actually a few questions I want to ask Dr. Sharon so that she can lead us into that discussion. So Dr. Sharon, why is protecting wealth as important as creating it? Because we love to create it, but should it also be as important, protecting that? Another question is going to be, what are the biggest risks people often overlook in financial planning? And last but not the least is going to be, what immediate steps can individuals take to protect their loved ones and their wealth? Thank you, Dr. Sharon, and take it on, please.
Thank you so much, Ms. Immaculate. We are graced in the audience with wonderful financial professionals. So, it's always a treat to come here every Thursday and learn together. And if you're also new, please feel at home. This is a welcoming, safe space where we get to share what we've learned. And then also, I'm sure there's always something that we can learn from each other. So like I was introduced, my name is Dr. Sharon Uwanyuze. I'm here in Missouri. It's always been a treat. I've been attending these for the past probably 5 years, because I started when I was even still a student, and now I'm working. So I plan to share some tools that have helped me, that I've learned from some amazing people here in the audience. And then, as we keep growing together. So you asked some amazing questions, and I want to first briefly go through the answers, and then I've prepared some slides with a bit more content on those best practices. So again, to remind everyone, we're here talking about how to protect wealth and some tools. Now, when we hear about that term wealth, it's probably not one that we use in our everyday standard circles. We think that it's something reserved for the top 1%, but that's not true. If you're working at all, whatever you have is your asset. It's the foundation of your wealth, basically. So when we are talking about and answering the question, why is protecting our wealth important, just as creating it, is if you're spending the time, the energy, the skills to create that wealth, that income, you need to protect it, because you don't want to be wasting your time, right? So I think of creating wealth like building a house. So if you're building a house, you want to get some sort of insurance so that in case of a storm, everything is not wiped away. And then later on, we're going to be talking about those tools that can help safeguard what we've protected. And then the second question touched on what are the biggest risks people often overlook when thinking about financial planning. So sometimes, based on where we are in work, what is available to us, we do have some benefits. And sometimes we may think that maybe that is enough. Say if you're employed, you may have employer-provided group life insurance, or if you're, depending on where you are in life, you may have some of those benefits. But it's important to know that if something is not transferable, it's not really your own. Right, so just keep that in mind as we tackle this aspect of what can truly be your own, that you can take with you wherever you are, that is not tied to an employer, for example. And then the last but not least is what are some actually practical steps we can take as individuals today to protect ourselves and even our loved ones. And really the first step is education, and all of us are here to educate ourselves, so kudos to everyone here. So understanding information is power. So understanding what tools are out there and how we can use them is a great first step. And then the second step is evaluating what fits you, right? So I believe in equity instead of equality. So equity is where you get a shoe that fits you, not the shoe for everyone. It's not a box that fits all. It's getting what fits you. So that's why we have, licensed financial professionals here to get with you afterwards for a one-on-one session to really figure out what can work for you with your current assets, income, whatever it is. And then last but not least is to take action, right? So if we learn about something good and we don't take action about it, it's as good as nothing, right? So it's important that as we learn things that are helpful for us and our loved ones, we actually get intentional about acting about it. So I do want to share just a few slides for my visual learners here. I'm a teacher, so we gotta make sure everybody's covered here.
Yes.
So let's share here briefly. Okay. So again, here we're learning about how we can truly protect what we build our lives working for, right? So that is what I'm calling our wealth. And we're going to be sharing some best practices, but obviously it's not exhaustive, right? It's not everything, but these are just a few that are tested and tried. And again, I have an image here of a house, because think about whatever you're working for as building a house. You want to make sure that everything is secure, it's protected, from any storms, anything that can come and try to wash it away. Okay, so again, what comes to mind when we truly think about this whole concept of, wealth? So wealth, again, even though we typically think of it as our money and assets, but it can also really be your freedom and time, your freedom of time to make these choices. Like, okay, do I actually want this job versus this one? Can I use this tool that I'm learning here or the other one? So we can never take for granted the fact that we have time and choice. We have health, we have vitality, we can move. So that's also a type of wealth. And then the other one is generational legacy. So if you are fortunate and you have parents, grandparents, great-grandparents that left you something, that is wealth. If you have a business and own a business, however small or big it is, that's wealth. Ability to travel, have a comfortable lifestyle, that's a form of wealth. So I want us to, again, think broadly and how we can protect all of this from all of these forms of wealth. Okay, so now when we think, why is it important, again, to protect our wealth just as it is important creating it? Now, wealth can disappear in a crisis, right? A person can go out there, you've been working hard, you're such a great employee, for example, but you go out there and you get into a car crash. So now, obviously, you may not be able to continue your job. You may get like a disability, or you can develop some really strong illnesses from that. This is the last, but not, the most unfortunate is death, obviously. But can you imagine all the things that you've worked for, all of a sudden they can disappear if you didn't have that blanket over it? So that in case of any job loss, you can still survive without being a burden to your loved ones. Even in case of death, whatever you built up can go to your loved ones. Okay, so that's where I think we always protect most properties. You have to. You don't even really have a choice on if to get car insurance or even renters insurance, mortgage insurance. Everything has insurance nowadays. But it's important to think about protecting our lives and everything that we're working to get, which we're calling here our wealth. And one of the tools that I'll be discussing with you here is Index Universal Life Insurance that helps protect not just your life in case of illness or death, but also gives you that market-linked growth to protect your wealth, right? It's not just, whatever you've built has to also be safeguarded. Okay, so why is it that people, overlook this? I mean, what I'm saying is really not new. We all know that life is fragile. We can get out there and anything can happen. So what risks do people actually overlook? So one is we can tend to rely on employer-based insurances. Like I told you, most employers, my current employer offers this opportunity group life insurance. It's great. Obviously, I'll not say, no, I don't want it. Obviously, I'll get it. However, it's important to know that this is not my own. It's my employer's. If I move on, hey, I don't have any coverage after all. So it's important to not just depend on such group opportunities and benefits. The second one, especially for young people, is thinking that those diseases like cancer and like heart disease and they're for old people. But no, none of us knows what can happen tomorrow. So ignoring that there are actually living risks like critical illnesses and chronic illness can be something that people overlook, but we shouldn't. And then the other one is not accounting for inflation. We know inflation is always happening. So why is it that we keep our hard-earned money in the savings accounts where it's growing at 0.0001 probably percent? Why not put it somewhere where it can grow, at a better rate to help protect what you've worked for again? And then the other one is not thinking about how taxes would affect you, especially when you take out that income at retirement age. So that's, just a holistic view of some of the things that people overlook and that we are here educating ourselves so that we don't fall as culprits over these risks. So I kept talking about, I personally believe that life insurance is the way to protect your life and what you've worked for. Now, there are obviously other ways that you can do that through, obviously, if you have a home, get insurance for it. If you have a car, get insurance. But ultimately, you can't even have those things if you're not alive, if you're bankrupt, if you've been working. We all know that the health system in the US especially is very expensive if you don't have coverage. So a basic health insurance will not cover you sufficiently in terms of terminal illness or chronic illness. So getting something that can ensure that, you don't finish up all your savings and now you're just there at the mercy of people is a great thing. So life insurance is a financial safety net for ourselves and or our loved ones. It provides not only death benefits, but living benefits. So you don't have to die to always use life insurance. I used to think life insurance is something that people get so that when they die, their children can, at least go to school and have a roof over their heads. So at first, this wasn't something very attractive to me, to be honest, until I heard about the opportunity of pairing it with an investing tool where whatever little or much I was earning at the time, at least was growing better than just putting it in a savings. So here we're going to briefly touch on some groups and types of insurances out there and what I believe is the best. So the first one, if you're employed again, is group life insurance. It's a benefit that many employers offer. It's given to you for free or at a very low cost. It's limited in that you can only get up to your salary or 2 times your salary in case of, say, death at work or significant injury at work. The key thing here is that it's not portable. So you can't, if you're changing jobs, it's not covering you. If you're suddenly laid off, which we know there's been a lot of laying off of employees, obviously you don't have it. And if you're in between jobs, you don't have it. The other thing is that it typically has no customization. So meaning that you can't have that investment component to it. So this is the cash value. And the other thing, it has limited riders. What I mean by this is in case you get a disability, for example, or an illness that prevents you from working, they'll give you a short amount. Again, the most they can give you is up to the full coverage of your salary. But that's basically it, and then you're on your own. The next one that is typical is called term life insurance. I think of this as renting a house, right? Or an apartment. It's like the word term, you choose a term. Are you getting it for 10 years, 20 years, or 30 years? It protects you during that amount of time. This one, you pay low premiums, meaning low monthly cost, and you're able to get those living benefits if you're to get a chronic terminal illness or death. Your dependents or whoever you put to collect those funds can get it. However, this one doesn't have cash value accumulation, meaning that you don't have an investment component to that. It's really good for short-term needs. And it's important to remember that when that term ends, whatever you choose, by the time you go to get a new policy, for example, you're most likely going to be older and not as healthy as you were when you were getting it. So the premiums are very likely to be much higher. So the best one here would be getting permanent life insurance. So this one ensures that you get coverage your whole life, and you can customize it to have an investment component to it, meaning it's cash value accumulation. So how does that actually work? Your premiums are going to be higher for the month because part of it is going to protecting you in case of any serious illness or even death, and then the other part goes to investment. It's flexible in that so personally, I started this when I was a student. So obviously my premium per month was small. However, upgrading to another job, you can increase the premiums. Why would it be important to increase the premium? Because whatever you invest, the little it is, it also grows at a small rate. If it's a little bit much, it also grows at a slightly higher rate. So that's why you may think about increasing it. It's also flexible. Say if a person lost a job, right? You can talk to them and they can lower that premium again. That way you're not, having to choose between paying a premium or eating. It offers those living benefits, meaning that if you get some serious illnesses, you can cash out your money. You don't have to wait till death to get that money. The other unique thing is that if your cash has accumulated over time, you can get loans from yourself from that money instead of like going to those like payday loans that have ridiculous interest rates. So those are all benefits of this kind of product, and which I believe is a great tool for protecting the wealth that is whatever you're earning right now. To me, it really, again, it doesn't depend on what kind of job you're doing. It's you're putting in the time, the effort to do it. You want to protect it so that it doesn't just get washed away suddenly. So what I want to highlight as I get to the climax of my presentation here is really that package of the payers your life insurance plus investing, which is a product called Indexed Universal Life Insurance. Again, it's a permanent type of insurance that is linked to like the stock market. So you can think of, you put your premium, part of it goes to, they invest it for you in this market where it can grow at a compounding effect. So you don't have to sit and watch stocks go up and down. You can just be putting in that monthly premium and they'll do the work, which I think is great personally, because while some people are excited about checking the stocks rising and up every day, I'm not that kind of person. I rather just know that it's there and I check once in a while, which once you get this product, you will get an online portal where you can monitor how your funds are doing and growing with time. It's also important to note that unlike regular stocks, putting your money straight into stocks, if you get this product, they'll make sure that you don't have, it's called the floor rate, meaning that you can't go below 0.25% growth. Whereas regular stocks, if you put your money straight into a stock, it can grow plus 10%. And then if the president says something, that freaks out investors, it can drop minus 20%. So putting it here ensures that your money is protected up to a cap, right? The typical cap is 7% growth. So if you rather not lose and grow, only grow, but then it may not be super ridiculous, but ensure that at least it doesn't get lost, which is, we are here learning about how to protect our hard-earned income and wealth. This, I believe, is a good option. And again, the opportunity to borrow from yourself, I think it's pretty great. You can take that money out because it's your money. You can put it back so that it keeps that compounding effect as growth. And obviously, you can get your living benefits, and the premiums are flexible. Again, you can increase them as you would like, or in case of a crisis, you can also lower them for a season. It's also pretty ideal for retirement planning and that wealth transfer. The transfer is important because, say you start as a young adult and then later on you get kids, but then obviously your cash value has been growing with time. You can transfer those funds to your children, so that they can, you also give them a cushion and a foundation to start higher up. So comparing all these products, again, group versus term versus Indexed Universal Life, to summarize here, group is typically basic employer coverage, no cash value, and it ends with a job. Term is a low cost per month, but no cash value accumulation, meaning no investment portion, and it expires after the term. And last but the best is truly permanent, which is IUL. And it grows with it gives you that investment component, which is cash value. It has living and death benefits. So how can you choose the right option for you? Again, if you're employed, obviously take on the group because, if it's a free benefit, why would you refuse it? However, know that you need to add something else. Term, if you are just needing just a short-term need, you may consider term. the best is really Index Universal Life because it gives you that long-term protection and financial growth. If you would like to see, for example, how much per month would give you a comfortable option for you, please, we have licensed professionals in the house here, in our virtual house, that we are willing to set up a one-on-one session with you so that we see what would work for you. So please check the flyer again for contact information, and we're here to provide them as well. So, what can you do to protect yourself and your loved ones? Please, and just get information. The fact that you're here, you did a great first step. Learning is a great first step. Understand the differences of options out there. Evaluate your current life situation and what coverage you may need. Talk to a licensed agent to get a personalized plan. And please don't wait because, you're getting older. That comes with its own risk. And this is not always given to everybody. You have to be, they check your health conditions, your age, your gender matter. So please, if you see that it's something you may need, don't wait to act on it. And with that, I would like us to keep interacting. Please ask questions and let's keep learning together. Thank you.
Oh, thank you so very much, Dr. Sharon. That was an eye-opener. So we come here all the time. We learn every day. But every time we come here, I, for myself, I learn a lot. So yes, let's not think about just work. Yes, it is good. It is very good to work. We all work to create that wealth. But as you have said it beautifully, let us remember the protecting what we earn, protecting what actually matters most to us is very important. Not just the money, the family, that matters to you. Because when we work, mostly maybe not for you, but if you're a parent and you have a family, you have children, for example, you want to make sure that those people are very protected because they depend on your income because you're able to go to work. So connecting wealth and life, they're actually inseparable because, again, as you said beautifully, Dr. Sharon, you cannot accumulate anything or you cannot make anything if you're not alive or if you're not able to work. So we create so many beautiful wealth, material-wise, and everything that we do, but protecting that is very important. So thank you so very much. This is actually the most important part for our audience to interact with our speaker. Share your thoughts, your questions. So we are here to learn together again. This is supposed to be an interactive session for us to make sure that by the time we leave here, we don't leave the same way we came back. So the floor is open for questions, for anything. You can actually send your question or comment into the chat. It is open as well. So the floor is open. Go ahead, Ale.
Thank you so much, Dr. Sharon. I guess my question has two sides. One, for a person who's on the 401k and on the professional route, how are we able to convince the person, not even convincing, to be able to enlighten the person that this is actually the right way to do? The second part, it's more of a responsibility as Rwandans. What are we doing in terms of coordinating with all these, the good commissioners, to be able to spread the word? I'm gonna be able to ramble if you allow me.
Yes.
Because what ends up happening when you look Rwandans who are in the US, you are, at least on my side, I see them in three levels. There's someone who are trying to survive. The other people who are able to survive, they need guidance. And the other people who are trying to self-actualization, but also they're taking the wrong path. So how do we reconcile that, the last part, which I think we can be able to reconcile that by giving them the news, which is the information, or telling them actually the sufferer's actualization is financial independence, rather than associating with the things that said we're independent, but really you're not independent, because if something happens, you're gonna do the GoFundMe, right? So I would like Sharon to touch on that. But I would like to touch the technical part, and then the second part, I'll actually even want to hear my senior Imakile want to say.
And then those were wonderful questions. I will start by tackling them, and then I'll let our senior add on. So your first question was really how, especially for employed people who have the benefit of 401k, how would, why would you have to choose one versus the other? Can you combine them? Why would it be necessary to even think about another product, yet you already have a 401k, correct? So I believe that's how I understood your question. And that was wonderful. We actually, thank you for clarifying. So we actually had a whole conversation last week comparing that, like 401k versus IUL versus even Roth. So I see Colin in the audience here, he gave that presentation. So I will give a summary on that, and I'm happy to connect with you so that we give you the full recording of that as well. So why may index universal life insurance that has that portion for protecting your life in addition to the investment portion be better, or even a good add-on to a 401k? So I personally, 401k is another option that I have through my current job. And the nice thing, many employers will encourage you to think about your retirement and savings by matching, right? So, okay, if you contribute up to, they will have a maximum that they can do. So I know for us, it's up to 8%, 8%. So they can match what you put in up to 8%. So that means that you can maximize, right? The more you put in, the more they add up for you, and you get like double basically. So I would advise that, yes, keep that benefit, but know that there are key things to remember when it comes to 401k. 401k is taxed, right? So when you go to take it out, they will tax it. So you do your contributions pre-tax, and then afterwards they will tax it at the end. And we know that with inflation, the taxes are also rising. So it's something to think about. Whereas with IUL, your contributions, you already put them on there once your money has already been taxed. So it will not be taxed at the end, which is a great thing, especially with the ever-increasing inflation. The second thing is that when 401k, you can only take out the money once you hit a certain age. I believe right now, it's like around 67. So you have to be a bit older, basically, to take it, or 59, something like that. So withdrawals before that age are penalized, basically. Whereas with Index Universal Life, you can get loans and withdrawals from your cash accumulation tax-free at any time. The other thing is that you do need again, there's that market risk advantage with IUL. So IUL, it will not, there's a floor rate, meaning that regardless of how the market works, the economy, it's not, so let's say there's a market crash, there's a recession, right? Your IUL is going to make sure that your hard-earned money and wealth doesn't drop below an add-on of 0.25%. Whereas we know that our 401ks are always fluctuating with the market. I'm trying to see, again, just to clarify, with 401k right now, is the withdrawal age is like 59 and a half, right? So anytime you're younger than that and you need money for something, you can't take it out without significant penalties. So that's mainly it that I would share with that. So your second question was, what are we doing to inform our communities, right? So this is and it can be Rwandans, Africans, anyone. I believe as long as you're working, as long as you're making an income, you want to protect it. So this information is for everyone, and that's why we are here educating ourselves. That's why I'm so grateful for people like Immaculate, the care about knowledge transfer, right? We are all here, we know something that we can share with each other. So why not create a place where we can come and do that? So those were my answers. I'll let her add on here to just make it more holistic here.
Yes, yes. Thank you so much, Dr. Sharon. And thank you, Ale. Those were very, very actually important questions, really. That is the reason we are here. To start, I think Dr. Sharon did explain well for people who are working and they have 401k. The one thing I will tell you, never leave money on the table. If your company is matching, maybe like Dr. Sharon is saying her company matches 8%. Take advantage of that. That is free money. Never leave it on the table. But normally when we're doing this kind of trainings, we tell you, this is just general. We call upon people actually to schedule. They're free. We give free, actually personalized sessions if you need to go deeper, because every family, everybody's financial need is always different. So my need, Sharon's need, your need is always going to be different. So we sit with you, we do what we call needs analysis to see exactly what you need. So when it comes to 401k, if they're matching 5%, only put 5% towards 401k. You need to diversify your options, because money in the 401k, as we all know, is pre-tax. It goes in pre-tax. What we usually actually use an analogy between a seed and a harvest. So when you're putting your seeds are not actually taxed. And IRS does it so well, because you're putting, let me say, you're putting $500 a month. That 500 is not taxed. So you're accumulating that wealth, that your nest egg, your retirement plan. When it is time, 59 and a half or 60, whenever you want to actually retire, you may have 500,000. Imagine which kind of a tax bracket you're going to be in. They never taxed you when you're putting the money in, when the seeds, when they were little. Now they're actually going to tax on your harvest, whereby they're taking a chunk of your money. You're here sitting thinking that, hey, by the time I retire, at least I have 500,000. If I take that out, that can push me, at least I will live comfortably with during my old age. But imagine if the tax bracket by then, you're in 45 percentile. So they're almost going to take away almost like your half of retirement. When you thought you have 500,000, now you have almost like 200 something. It's not even 300,000. That is number one. Although 401k is good, should not be your only option for retirement. Because relying on that wealth and saying that this is my plan for retirement, with everything in the market, volatility in the market, you can never rely on that. And something else, 401k, most of the money in 401k are in the market, like Dr. Sharon was saying. When the market goes down, I saw, because during doing this kind of work, I have so many clients who are crying during COVID era, saying that I almost lost almost a half of my retirement. Imagine that, thinking that you're creating something for the future, but you're losing it. But should you actually diversify your option and have that 401k because your employer is currently contributing for you, but have something else that is safer, just in case something happens to your 401k? And normally when we're helping people individually, we tell you, yeah, diversify, look into different options. We never tell you this is bad, because of course that is an option, but find something that is good. And I believe when we compare that 401k with a group, this is actually something else. Another concern I always get with my professional groups, professional people, because those are the ones who are heavily invested in 401k, at the same time invested in actually taking group life insurance. I'm not blaming anybody.
Actually, I was asking for the professionals as well.
Oh, yes. Because the reason I'm saying that, I was in corporate for over 15 years. I had a group life from the company I worked for. I worked for one company after college for almost 10. I had that group life for the whole family, thinking, oh, we are set. After I got licensed, imagine I was not actually, I was educated, not saying that I'm ignorant, but I didn't know the difference, because these providers will never tell you, by the way, we're giving you this group life, but when you leave here, you're not going to have anything. I was educated but not licensed in life insurance, so I didn't know the difference, and they never actually explain to you. They'll tell you, hey, are you signing up for life insurance for you, your husband, your children? Yes, tick, tick, because you need everybody to be actually protected. You're doing a good thing because you feel like, hey, my family needs to be safe. But you forget that you don't know, because I didn't know by then. So that is why we are here. This is a crusade. This actually goes to the next question you're asking about: what is the community doing? The responsibility of the community. The crusade, educational crusade. This is the crusade we are on. We're not here just because these sessions are free. They're not actually, nobody pays to them. But we owe our communities, now that we know better, we need to educate one another. So we know the difference. We have so many products out there, different ones, but they all work differently. We may only know one, maybe a term life, because everybody, at least people who knows about life insurance, those ones who are now carrying the group life, they know traditional term life. I tell people, having a traditional term life insurance without living benefits is as good as nothing. But what if you don't die, but you get sick? They wait for you to die, and then your beneficiaries will get the money. What if you have a critical illness, you down for a year or two, you have a home? That home is going to be gone before you're gone. If you have kids in school, if yourself in school, if you're paying your rent, you're going to lose out before you're gone. Again, when you talk about protecting the wealth and the best practices, we need to pick the best option that protects us all together. Today, if I'm sick, I am covered, because those living benefits, the insured becomes their own beneficiaries. These are the products whereby you can actually become your own beneficiaries. If you get sick, you become your beneficiary, be able to get your money, and protect what matters most to you: your wealth, your income, your family. So the second question was the community responsibility. This is what we are doing, Ali. We need many people to join us, Join us. Let us spread the word. Let us actually be on the crusade.
I'm with you.
Yeah, yes, sir. To avoid, let me tell you something that hurts me. We work so hard. I know all Africans, at least I know. We come here, we work so hard. But it hurts when you see someone getting sick or living this life, and they put a GoFundMe out there. That GoFundMe is going only to help put someone 6 feet under. It is not going to feed your children. It is not going to pay your mortgage. It is not going to take care of your debts. So why not pick the best practice? Because we are capable. We all own cars, we own homes. They are 100% protected. Even the phones, they are protected, but we forget the source of everything. That is the crusade we have actually all to learn. You know, if you want to join in, actually, you know, I tell people, you talked about some people working for survival. You know, they work, you know, they live paycheck to paycheck. You know, some people need some guidance, you know, in this country. So for me, I tell people, maybe, I don't know, people who are here have been a little longer, almost 25 years now. I went to college, I thought, oh, the best thing to do is to be in an office and work and do stuff. But I came to realize being educated doesn't put you in one, like, put in a basket and keep you there. Open up your mind, you know, look out there. Can you actually make a living and actually be of, you know, give some benefits to other people? Can you use your knowledge to serve you and your family and be able to be a blessing to someone else? You know, let us open our minds. We are here to learn together. Again, these sessions are always here on Thursday, but they are general, as you can see. But we always encourage people to come up. We give you actually personalized sessions. So we sit together, we learn together to see how much or what we can do to actually help our communities and help ourselves. I hope we did tackle all the questions. If not, we can.
You know, you did actually. Thank you so much.
Appreciate that. Let's have some other people. If you have questions to our great speaker, anything you want to add for her, we are again learning together here. As Mr. Nshuti was asking, we are here as a community to learn together, to find solutions, best practices, because we have what it takes. We just need the knowledge and awareness. I see Collins did put something in the chat saying that also 401k has no insurance policy if you become terminally ill or chronically. That is correct. 401k, if you get sick and you have your money there, to touch it, you're going to be heavily penalized until you become, 59 and a half to be able to start getting your money. But with other products like an IUL, Index Universal Life, as long as you have your cash, that is your bank. That is why we say you can borrow from yourself. It's like you become your own bank, literally. So imagine not having to go to the bank to borrow, but you can borrow from yourself. There's nothing as good as that. That was good.
Thank you all. This is Roy. These are great discussions, and Aline did bring up a good point about the 401ks. In addition, they do have some limitations where they do have the RMD, which is the required minimum distribution. At age 73, you have to get your money out and distribute it elsewhere. So on the other side, IUL does not have that as a limitation. Then being in the workforce, if you max out for 2025, you max out at 23,500 in your contributions to the 401k, you don't have anywhere else to put them. We're here for you. The IUL is here, and it also opens up one of our big products that we as licensed financial professionals do have, which is the annuities. Annuities, we have the minimum that you can invest at least 10,000 and above, and it is also index protected against all the market forces that Dr. Sharon did allude to pretty well. The floor rates that protects the ups and downs in the stock market. Well, we want to thank those who have been able to contribute to that, and that's my submission for now.
Thank you, Mr. Kaizu. That was good. Anybody else? Questions?
I'm gonna come back again.
Anytime, for sure.
This is gonna be more of a Socratic question. So what is this question that always come back every day to you as someone who have experience. So what is, you know, so we kind of try to touch like 401k, but like especially looking at the community of Rwandans. So what is the issue that continue coming? And I'm gonna ask even Sharon to, even you as well, to even anyone in the public, how can we address that issue that keep coming back? Thank you so much.
All right, Sharon, you want to take it on, or you?
I can start and please add on. I think Ms. Margaret already said it. For me, what I keep seeing is the GoFundMes, right? If a person has gets a really serious diagnosis at the hospital, or they get into a bad accident and now they have a disability, or they get an untimely death, I keep seeing these GoFundMes, but there's only so much that the family or the individual can collect. So I think it's really important that and that's what we don't tend to see in other communities, right? That are not maybe people of color. They know that it's important. Like, you don't even have to teach them much to know that, you actually do need the life insurance. Like, it's a non-negotiable for them. They know, but for us, I feel like we see it sometimes as like, oh, this money that I'm paying every month, we don't understand it yet. So that's why we're here again, to learn, so that we don't have to keep seeing that problem come up.
Yeah, just to add on that, Dr. Sharon, thank you again, Ali. So what we see mostly, really, is I'm young, I'm healthy, I still have time. Life insurance is expensive. Nothing is going to happen to me. But the funny thing is, we ignore the reality of life. Or at one time we'll get sick, at one time we'll go. That is a reality. It's not even, it's not even a question of if I get sick or if I die. That is going to happen at one point. So when we talk about me being young, I'm young. I have no children. I have no family, no house. What am I protecting? You're protecting yourself. Because what a family member has, you do have as a young person. You have to live. You have to rent, even if you don't have a home. You can get sick. And as Dr. Sean was explaining earlier, with life insurance or protecting yourself, the earlier you do, the better. What people don't understand, the reason we keep pushing for these crusades, financial literacy crusades, is nobody knows when they will be sick. Life insurance is open to everyone, but everyone does not qualify for it. We forget that. We have young people who have critical illnesses, chronic illnesses, and they end up losing insurability. You might be 20, 18, even 10, and you cannot be insured, because it is to the interest of insurance companies as well, because they offer living benefits when you're sick, when you're critically ill, terminally ill, chronically ill. If you took $1 million policy, they will give you to 100%. They want to make sure that before you get in, you're 100% actually not sick. You're good. So we forget that. So that saying of myth of saying I'm young, it is expensive. Guess what? It is even going to be more expensive if you wait a year or two. Again, if you get sick, or even if you don't get sick, life insurance is cheaper or expensive with age, with health, with your way of living. So you would rather protect yourself today. I always tell people, you're as young as you can be only today, because today, even if you're 15 or 50, next year, tomorrow you might be 51, and it's going to be more costly. So those three things: young, I'm expensive, I'm healthy. It is a wastage of money, but we do waste money on protecting our homes and our cars that we acquire, and we forget that the source of it is you. If you're not healthy, if you're not working, you're the source of everything that you own. So protect the source. That is why we call it income protection. Because when the source is protected, your whole wealth is protected. Thank you. Hope that answers the question. All right. All right. Thank you again, Dr. Shon, for. All right. Did you have another question or something to add? Okay.
I'll have a comment. And my comment is very simple. I would like to encourage. It's a word of encouragement, really, Auntie. So this is something that will be like Saul before he became Paul. So you will need a level of consistency, and it's always good when we see like the Dr. Wanyuze, people who recognizes in the community try actually to join the movement, and then that's what the values as Rwandans it stands for, and I know all in short I'm trying to say thank you because I can.
Thank you so much. It looks like we are almost actually out of time. If nobody else has any questions, we'll give back to our speaker to give us our final remarks. And yeah, we will call it a night, and we will be waiting actually for the recording. Thank you.
Thank you again for to each and everyone who was here. Thank you for my wonderful host, for always being a great community supporter and educator for all of us. Thank you for the lively conversations. I hope we all took away something. Again, information is power, and it's only as useful as if we can act upon it, though. We've shared, the resource where you can watch other recordings. Feel free to reach out to any of us here. You were invited here by somebody, so feel free to reach out if you have any other questions or if you'd want a one-on-one session to get to see the numbers that work for you. And as always, this is a weekly thing. Next time there will be other presenters, other topics. So keep coming and let's learn and grow together. Thank you.
Thank you so much once again, and have a lovely evening. See you again next Thursday, the same time, and look out for the recording. Have a great night, everyone.